HDFC and HDFC Bank are finally set to merge in a deal which has actually been speculated upon for longer than I have reported on financial news at least. This deal comes at a time when regulations for banks and non-banks and housing finance companies are being harmonized, so it makes it less lucrative for the two businesses to continue to be housed in separate entities. This is going to be a two-step process where HDFC Investments and Holdings, which are wholly owned subsidiaries of Limited, will be merged into HDFC, and as step 2, HDFC Limited is going to be subsumed into HDFC Bank. Now, for every 25 shares of HDFC, investors will get 42 shares of HDFC Bank. This deal is likely to close in 14 to 18 months. But once the merger is through, HDFC Bank will be 100% owned by public shareholders, and existing shareholders of HDFC Limited will end up holding about 41% stake in the bank, and HDFC's approximately 21% stake in HDFC Bank will completely get extinguished. Now, it is going to be a financial behemoth with a 44% jump in the net worth will be over 3.5 lakh crores. Capital adequacy ratio will rise by 30 basis points and advances almost 17.9 lakh crore rupees, which is a 42% jump. And with this, HDFC Bank is going to rival the giant State Bank of India and significantly widen the gap with private peers like ICICI Bank and Axis Bank, and this is only telling you the loan mix. Now, how will the loan actually mix look after the merger? Currently, mortgage is about 11% of HDFC Bank's portfolio, 26% corporate, 28% retail. For HDFC, 77% is individual housing loans and so on. Once the combined entity comes into force, mortgage alone is going to constitute almost a third of the combined entity's book, retail 21%, corporate 19%, and so on. The big challenge will be regulatory approvals, whether RBI and insurance regulators bless this merger. They allow relief on reserve requirements, which could be a bit of a drag on HDFC Bank's P&L because of higher cash reserve ratio and SLR requirements. There will also be technical gains with an additional 7 to 8% headroom opening up for foreign investors to buy into the stock. Deepak Parekh would actually have crossed the age cap of 75 years for the bank's board and therefore will be stepping down therefore. But the existing chairman and CEO of the bank, they will continue in their roles. Lastly, in terms of management, K.K. Mistry also no longer wishes to continue in this executive role, and he will be reaching 70 years of age, close to that, by the time the merger goes through. So he will take up probably a board seat only. Listen in to what the top brass of HDFC had to say.